Welcome, day traders. Asian stock markets are now gripped by pessimism following a sharp drop on Wall Street. Geopolitical tensions are increasing as the Russia-Ukraine conflict has escalated once again. Last week, the US imposed sweeping tech export restrictions to protect national security interests. The Biden administration is trying to restrict China's access to American semiconductors. Since the start of the trade war, this is probably the toughest move against China. Usually, stock markets lose momentum amid mounting geopolitical tensions. Wall Street has been declining for 4 days in a row, and today the US stock futures managed to slightly stabilize. When assessing economic prospects, the Fed heavily relies on its hawkish stance. President of the Bank of Chicago, Charles Evans, believes it's crucial to see some improvements in inflation in the next 6 months. Fed Vice Chair Lael Brainard is sure that more rate hikes are necessary to tame inflation, and this is why it's better to stick to aggressive tightening for 12 or 18 months. However, she also made some positive statements in her speech yesterday, which calmed the market. She said that the regulator should be extremely cautious when making new rate increases. Brainard also noted that previous rate hikes have not harmed the US economy and that there is still a path to a soft landing. So far, the US economy has remained resilient. Therefore, the US dollar keeps rising, logging its 5-day winning streak. Overnight, the sell-off of bonds intensified, which pushed the yields higher. The greenback also benefited from it. Growing geopolitical tensions and warning from the IMF and the World Bank about a worldwide recession next year have spurred demand for the safe haven US dollar. Currently, investors are looking forward to the inflation report, which is on tap on Thursday. Besides, the Fed meeting minutes are due on Wednesday. Several Fed officials are also scheduled to make speeches. As seen, there are plenty of favorable factors for the US currency. It has been rising steadily across the board versus its main rivals. Today, the US dollar index has already reached 113.22, trading in the price corridor of 112.96 and 113.50. The US dollar also climbed against the yen, and today the dollar-yen pair is trading in the range of 145.47 and 145.86. Since yesterday, it has advanced by 5%, hovering at 145.67. 3 weeks ago, the Bank of Japan intervened to stem the sharp falls in the yen, and back then it was trading only a few tenths of a percent higher than today's level. Japan's trading floors reopened after a holiday. So far, the Bank of Japan has made verbal intervention to support the yen. Finance Minister Shinichi Suzuki confirmed once again that the central bank is closely monitoring the current trajectory of the yen. It stands ready to respond to speculative currency moves. The recent interventions have bolstered the Japanese currency. However, strong US dollar and the divergence in the monetary policies of the Fed and the Bank of Japan are widening on the yen. This is why it may depreciate soon. Even so, the Bank of Japan is likely to intervene once again. Japanese Prime Minister Fumio Kishida said about such a probability today. He urged companies that raise prices to increase the wages of their employees. This step may ease the negative impact on a weak yen on the standard of living. Treasurer of Australia, Jim Chalmers, also delivered a speech today. He made some positive remarks. He believes that Australia may avoid a recession. The budget, which will be published in 2 weeks, does not indicate a decline in the economy. The Australian dollar is unable to resume growth even despite such upbeat economic prospects. It's even viewed as the main outsider in the currency basket. The AUD-USD pair declined below yesterday's closing level. It's extending losses today. The risk-sensitive Aussie has already dropped to 0.6269. It's likely to approach new lows in the near future. The pair may move in the bearish channel of 0.6248 and 0.6306 in the Asian session amid market uncertainty and increased risk aversion. And that's all for now. Subscribe to our channel and keep close tabs on the market developments. See you soon.